an expected rate cut on the way and mortgage rates hitting their lowest level since February of last year, could we see a boom in refinancings? Joining us now is Matt Ishbia, CEO of United Wholesale Mortgage. He is also an owner of the Phoenix Suns. And Matt, it's great to have you back on Overtime. Welcome back.
Well, thanks for having me.
So that's exactly where I'm going to start, because we have seen Treasury yields and with them mortgage rates falling. We're at a 19-month low for mortgage rates, and the Fed hasn't even begun to cut yet. So how are you preparing for the possibility of a reemergence in not only refis, but also interest in taking out mortgage loans if we do start to see a housing rebound here?
Yeah, no, it's really interesting. Rates are really low right now. And, people are waiting for the Fed to cut rates next week. We all anticipate they'll cut 25 basis points. But the mortgage rates are already lower, right? People are waiting, it's going to happen. It already happened. The refi boom is happening right now. People aren't really available and realizing, but people are doing refinances right now. Anyone that bought a house in 2022, 23, 24 should be refinancing. Rates are 30-year fixed in the 5s, not 6 and 7 or 8. And so people got to go to mortgagematchup.com, find the right originator. But the truth is, it's happening right now. You don't have to wait for the Fed. It's really exciting, and we're seeing a big boom already here at UWM.
That said, how do you expect that trajectory to play out now as you do have a Fed that's moving into an easing cycle?
Yeah, I think it's going to continue. So it's not only refinances, but also purchases, right? Because now more purchasing power. Someone buying a $400,000 house yesterday couldn't afford it, but now they can afford it because interest rate's 5.75 instead of 7, right? So more homeowner demand, more opportunity. So we're seeing it on purchase, refi, and it's going to continue. We really look at 25 is going to be an amazing year in the mortgage industry. It's already a great year, 24, but it's going to get even better next year. And we've been waiting. We've been prepared at UWM, and we're excited about it, and it's already happening. And you'll see it in our third quarter results, but more likely fourth quarter and next year.
Matt, is there a magic number on rates where the homeowner is likely to feel more comfortable tapping into the equity to make purchases?
Yeah, I really think that the number is in the 5s when we're there. Like I said for probably a year and a half, 2 years, like when it gets to 5.99, 5.75, you're going to see demand on refinances. Anything in the 5s is like amazing rates if you look over the span. Obviously, you got to take out 20 and 21 where the rates were 2.75 and 3%. But beyond those 2 years, anything in the 5s is fantastic. And so we're there now. And the Fed's going to drop rates even more. Will that mean more mortgage rates go down even further? Maybe. But 30-year fix in the 5s is a great deal. People are taking advantage of rate and term, but also, to your point, cash out. Equity in housing is as big as it's been in a long, long time. People have equity, and so cashing out, it's been hard to get off those 3% rates, but now at 5.5 or 5.75 and being able to pay off some heavy debt from credit cards, we're seeing a lot of people do that right now. So opportunities out there right now, and we're taking advantage of it, and I think consumers are as well.
I'm glad you went there, because U.S. homeowners are sitting on $32 trillion in home equity right now. That is a new record. And we talk about depleted savings, and we talk about cash-strapped consumers that are tightening their belts. But as you do start to see rates come down, does this become another lever that consumers can pull on for more spending?
Absolutely is another lever for them, right? It's their money. If someone has a $400,000 house and their mortgage is $300,000, there's $100,000 in equity. Now, how do you tap that, right? Once again, you got to find the right place. Sometimes your servicer's not the right place. You got to go to a mortgage matchup or find a local lender that can actually help you with that and actually get you that equity, $30,000, $40,000, $50,000 at a rate. And if you look at it and do the math, like some people talk about their mortgage interest rate rather than their actual housing rate. Because if you think about their housing rate and then also their credit card debt and their auto loans, interest rates all blended, it might be 7 or 8%. So getting them down to 5.5, 5.75 on a cash out refinance is becoming very popular right now, beyond just the regular rate and term refinance, lowering your payment.
Okay. And we mentioned, you're the owner of the NBA's Phoenix Suns. You also own the WNBA's Mercury. So I would be remiss if I didn't ask you a question on a day like today where CNBC has reported on the Milwaukee Bucks in a deal, a stake that values that team at $4 billion. That's up from $3.2 billion last year. Your thoughts on sports teams' valuations? Do they continue to climb? Is there a point at which we start to see this peak out?
Yeah, it's great. I think, I don't focus too much on valuation. I focus on how to make the fan experience great. How do I do great things for the league, the WNBA, the NBA? But Adam Silver and the NBA has done an amazing job valuations are going up because there's a supply and demand. There's only 30 NBA teams. And the truth is, with the new TV deal that Adam Silver did an amazing job putting together, it's going to make a big impact on valuations. But valuations, like, I want to focus on winning. How do we win a championship with the Suns or the Mercury? And so that's what I focus on more than valuations. Valuations are for finance people. I'm much more of a fan, and I enjoy the game too much to focus on that. But they definitely are going up, to answer your question.
Is hockey going to come to Arizona?
Oh, I hope so. It's a 4-sport town, so hopefully we'll get it back at one point.